When you purchase a home here in California, you get what's called a supplemental tax. That can take anywhere between 6 months to 24 months to get a supplemental. And you will get something in the mail prior to getting the tax bill. Now it says supplemental right at the top of the county tax bill, and that is a supplemental to your regular property tax that is not included into your mortgage payment. And we're going to go over the difference between the regular property tax and the supplemental. So the supplemental, if you purchase a property and the property is getting assessed for, let's say, $200,000, we've seen them very, very low as $44,000 here in California because the person selling it owned it for many, many years, so they were getting assessed at a very low assessed value. And then you come in and buy it, let's say at $300,000, there's a huge gap there of assessed value. The county is going to want that excess value through a supplemental tax. So for an example, if the person selling the property has been getting assessed for $200,000 with a property tax rate of 1.25, tax rates are going to be different based on the area of the property. We're just going to use 1.25 for an example. So it's getting 1.25. The annual property tax is $2,500. That's what they're going to pay, and they're going to pay that in 2 installments of $1,250 and $1,250. Now you come in as the home buyer and you're purchasing it for $300,000, still with the same property tax rate of 1.25 as an example. Now your first year property tax bill is going to be $3,750 because the county is going to want that new assessed value of whatever you're purchasing at. So there's a difference of $100,000 value. The county can take that 6 to 24 months to come in and say, hey, the previous owner paid these property tax bills 1 year early. You bought the house on this date. We're going to want that excess property tax of the $100,000 at 1.25. So you're going to owe $1,250. That's the 1.25 based on that $100,000. So you're going to have to write. It's going to be in two installments of half and half. You're going to write a $625 and $625 check to the county for that difference of that $100,000. So that's the difference between the supplemental and the regular property tax bill. Your lender in escrow has already based your mortgage payment with the taxes based on that 1.25 going forward. So you're going to be already good to go going forward. It's the previous year that the owner paid that property taxes. You bought it, the county's going to come in and reassess it at the new purchase price, and you're going to have that difference that you've got to make up. This is an example. So we can tell you what the property is getting assessed at. Your realtor can get you that information on what the property you're buying is getting assessed at today, and then once you buy it, you can anticipate the difference on writing that check. Anywhere between 6 months to about 24 months, you're going to get that bill. So that's the difference between the regular property tax bill, which going forward, if you have an escrow account, it's going to be within that mortgage payment. You're going to be fine. Now, if you're buying in a new area and there's new schools, shopping mall, police station, fire station, the city government, a park, they're going to tax those residents in that area, and you're going to get a supplemental tax for that. So as new development gets built in the area that you're in, if it does, when it does, you're going to get a supplemental tax bill for that because the homeowners pay for that, those new developments. But from the beginning on when you purchased the property, going forward, expect a supplemental anywhere between 6 months to 24 months, the difference. So don't be surprised when you get a supplemental tax bill. You're going to have to write a check for that, do budget for it going forward. It's only going to be one time because from here on out, that $300,000 is already going to be there. That 1.25 is already factored into your mortgage payment going forward. So if you got any questions regarding the supplemental tax bill, connect with me, Nathan Rufty, or your real estate agent, the one you're going through escrow right now. But this is the difference between regular property tax bill and your supplemental. So if you got any questions on that, don't hesitate to give us a call.